Good morning, everyone, and welcome to a new episode of ZEFE. Today's opening bell, or how we call it here in Romania, ZEFE Deschiderea De Astăzi. Today we are discussing with CHARLES-HENRY MONCHAU, Chief Investment Officer and member of the Executive Committee at CIS, a family-owned Swiss financial group. Charles, good morning.
Good morning. Thank you so much for having me.
Thank you very much for taking your time being here with us, Charles. I've been following you on LinkedIn for a while, and I must say you have some fantastic posts there about investments, statistics, curiosities, and so on. And I must say some of them inspired me for some news article, and keep them coming. And thank you, Charles. Let's see. We are on all-time highs on the markets, not only in Bucharest but on Wall Street as well.
Yeah.
What's your take? What's your current take on the markets?
Well, it might be a surprise for many people, but actually it isn't. When you invest into the stock market, you basically invest into the global economy, and the global economy, since the pandemic has been rebounding quite strongly, not only in real terms but also in nominal terms. Everyone looks at inflation as something negative, but actually for stocks, it's not a bad thing. Actually, stocks is one of the best way to get protected against inflation. So with the rise of nominal growth, margin expansion for companies, the market has been going up. The only caveat is that let's say the progression of the markets has been until now mainly concentrated into some large cap tech stocks in the US. Let's say also what we call the granolas in Europe, so a limited number of very big stocks, very big companies. So now for the market to continue to move higher, we need to see an expansion of the rally into the laggards of the market. So think about, for instance, small caps, which are starting to move now in the US. They have been, let's say, performing quite badly. More a reflection of the domestic economy, which is not doing, as good as all of these, bellwether. Think, for instance, about, let's say, the big tech companies in the US, which are eating the world. So again, strong market reflecting, nominal growth, also the AI bubble, the AI expansion. But what we want to see now is a broadening of the market advance.
In the US, we have this rotation of historic proportions, as Wall Street Journal headlined last week. And we also had Tesla and Alphabet financial results dragging down the market. In the next couple of months, do you see the Magnificent Seven still being so magnificent like it was in the last year?
We still have a long-term positive view on these, most of these Mag 7, not all of them, but, we believe that indeed, if you look at earnings growth expectations, revenue growth expectations, the fact that they have, a very strong economic moat, that they're also generating a lot of cash, which, enable them to buy back their stocks, means that they might continue to, let's say, move higher. But what is very interesting is indeed this rotation taking place. And there are two reasons why, the rotation might continue, that we might see some new leadership in the market. The first reason is valuations. There is a big valuation gap between the Mag 7 and the rest of the market. Just one illustration is that if you look at the S&P equal weights, so you don't look at the S&P 500 in the US as, let's say, made of weightings based on the capitalization of the stock, but you just take, you give the same weight to all of the S&P 500 components. So if you compare the S&P 500 capitalization weighted and the S&P 500 equal weighted, the first one is trading on 22 times forward earnings, whereas the equal weight is trading on something which is 15 or 16 times. So you can see there is a big dichotomy between the two markets. So that's the first reason, valuation. And then you have earnings growth expectation, because you mentioned Tesla and Alphabet, for instance. This is going to be a test. The expectations by investors are very high. The consensus has kept upgrading the earnings growth expectations for this Max 7, which means that the bar has been set quite high. For the rest of the market, you can call him the magnificent others if you want, the bar is quite low. So earnings growth expectations have been revised, downwards, which explained, by the way, why also they have been lagging the Max 7. But if you look forward, if we do have some positive surprises on the magnificent others, then the market will continue to rotate, will continue to shift into this one. So it's a question of valuation plus expectations. And it will not be a surprise to see this rotation happening exactly also at the time where Wall Street is expecting the first Fed rate cut to take place in September. Because also what you need to keep in mind is that higher interest rates have been a positive for Max 7. Why is that? Because they have a lot of cash. So they have been investing their cash at the higher interest rates, whereas the rest of the market don't have as much cash. On the contrary, they have debt, which means that interest rates being higher was a negative. So now that we are seeing, let's say, interest rate cuts, the market investors might start to think differently. And this also explains the rotation that we're currently seeing.
Speaking about interest rates cuts, Charles, what we know so far is that we enter this cycle of interest rates cuts, and we also have elections in autumn. From your point of view, what companies are the most well positioned so far to profit from these events? Banks, energy companies?
So you mean the interest rate cuts or the election?
For both. Volatile market in Wall Street, also rate cuts there in the US, and if it's to add the war going on in Eastern Europe, that's another factor.
Okay, let me try to then answer to both questions. I think currently what we are seeing being pricing by the markets is not necessarily a Trump trade. It's a Powell trade. Because since the CPI report, the latest CPI report in the US, we have seen the dollar weakening, we have seen bond yields moving down. And this is not a Trump trade. This is a Powell trade in the sense that CPI being lower than expected is opening the door for a Fed rate cut in September. And by the way, the market is currently giving almost a 1% chance of a Fed rate cut. So the market has been pricing in these events. And this is why we start to see value stocks coming back, small caps coming back, also international markets, performing decently. And you're right, for instance, financials have been doing quite well. Why is that? Not because, historically they take advantage of a Fed rate cut. It's because financials in the US, they are heavily loaded with bonds and they are facing currently huge unrealized losses. The fact that bond yields are coming down is kind of a relief, and this is why financials are performing decently. So for the time being, the market is really pricing in this Powell trade. But depending on the outcome of the US elections, which is still kind of unsure, it looks like Trump has a higher chance of going through, but it is not, let's say, done for the time being. But if, a Trump gets, elected, then we're going to see indeed a Trump trade. And the Trump trade is very much about more tariffs, especially against China. That means that the friend-shoring and onshoring trade is going to take advantage of this. So companies building, manufacturers in the US, companies doing business in the US, they might benefit from this. Countries which are friends with the US, so think about India, think about Vietnam, for instance, but let's say forget China, definitely. Deregulation is also mainly about banks, so they might continue to perform, quite nicely. Energy, coal are going to do well. Renewables are not going to do well. So you can see that there are a lot of, let's say, long-short trades that then could start to be implemented. We start to see this, but for the timing, this is not the most powerful trade. The most powerful trade at this time is a power trade, because if Trump gets reelected, that means more spending, more tariff, probably tax cuts being financed by more tariffs imposed on China. So here, don't think about bond yields moving down, think about bond yields moving up. And that means also that the dollar might be again seen as safe haven. So don't think about the weaker dollar, think about the stronger dollar. So that's why, you know, you need to be very careful with, you know, the trades you currently want to look at. I think that, again, this is currently a Powell trade, and the Trump trade might happen later on.
Let's see about Romania. For those who don't know, last year in Romania we had the biggest IPO in Europe, the listing of 20% of Hydroelectrica, almost 2 billion euros. How do you see the Romanian market? I saw a post on your LinkedIn. We here at the Bucharest Stock Exchange, we outperformed the Nasdaq index in the last 5 years. How do you see the market?
Yeah, crazy performance by Romania, but again, as mentioned before, the stock market is reflecting the economy. So I think that Romania is definitely being recognized now as a pro-business country, where the tax rate is among the lowest in Europe. A lot of things are going on there. So I guess initially, with the invasion of Ukraine, there was obviously some doubts, you know, with investors about what can happen to Romania in Romania. But now I think that investors start to looking, you know, forwards. On our side, this is a market that we really want to understand and we want to dig in. The reason being that the old Europe is not doing very well, so we need to look at the new Europe, and Romania is definitely, let's say, the you know, the new Europe and the future of Europe. So we want to be positioned in that kind of countries, you know, find the next jewels in Eastern Europe and in Romania in particular. So I was quite impressed to see what has been happening, and I do see, you know, trend as usually long lasting. The trend is your friends. So this is why, you know, we need to look at this market, which is still cheap, you know, by some standards. And again, you know, we like the fact that it's pro-business, that it's the new capitalism being there, and this is a market we want to look at.
The price to earning ratio here in Romania is around 10 for the main index, composed by 20 of the largest companies listed. In those times, in the current times, how relevant is price to earning ratio?
Well, you know, PE is just one among the different, let's say, valuation ratios. You need to look at different valuation ratios, and PE is not a good proxy for future performance. I'm gonna just, you know, share with you two examples. The most expensive market in the world is India. India has been, let's say, you know, keep moving up. The most, let's say, so-called developed markets, which is the most expensive, is the US, and it has been there for, you know, a very long time. They're expensive for a reason. They're expensive because they have a very high return on equity, and investors are willing to pay for this. So the fact that the PE is cheap doesn't mean that, you know, you need to invest. But if it's cheap, and on top of that, capital flows are coming to Romania. On top of that, return on investment capital of companies keep improving. Earnings growth is strong. You know, there is, let's say, kind of an alignment of the planets, and this could be indeed something quite interesting. But again, you know, we are the, let's say, early innings of our thesis on a country like Romania, but we want to dig more. I think probably, let's say, most of the large asset managers, a private bank, are non-exposed, if not underexposed, to Romania, and that means that means also there is a high potential for flows to keep moving in, and this is why, you know, it's interesting.
Charles, we're approaching the end of this video interview. What was the main factor that made you say, okay, that's the Romanian market, it beat Nasdaq, we need to dig in? What was the main factor that you know, dragged you here?
Well, you know, the thing is that it comes to my I have two kind of financial education. One is fundamental, and the other one is technical. So when you look at the fundamental, you know, you're usually attracted to the main evidence. You know, then you need to have data, so you go mainstream. And then if you look at when you use technical analysis, the charts are telling you something. And this is why, you know, my eyes got attracted not by, let's say, a long fundamental research study, but one chart, you know, telling me something is going on there. And I really like this because, you know, it's very often technical analysis can spot one trend, you know, taking place. You know, I'm going to tell you another example. If you look at Elveţia, and you just look at valuation, you look at some fundamental research, you say, okay, you tell yourself, okay, it's too expensive, you know, I'm probably late, you know, to the move. But then if you look at charts, you can recognize some long-term pattern, and that something is happening there. It's a long-term winner, and you need to look at a long-term winner. So this is why, you know, again, I spotted the chart and I told myself, okay, well, something is taking place there. I need to dig further. And when you have, let's say, the convergence of technicals and fundamentals, that's the most beautiful investment case. And this is why I want to do my own work to validate, let's say, the fact that there is a trend going on there, which might be a long-term trend.
As much as I would like to end on this optimist tone, I have to ask you, Charles, your personal bet, Trump or Harris?
Well, you know, it's politics are always very difficult to read. You know, there were some elections in France 3 weeks ago, and the final outcome was quite surprising. So everything can happen. I think that Democrats are, you know, unfortunately for them, are entering the race, you know, quite late. And currently, let's say the betting odds are definitely in favor of Trump. So he's favorite in the race, but again, no, it's a very uncertain election. Everything can happen. So let's see. And markets, by the way, don't like uncertainty. So my let's say kind of sure bet is that volatility is probably going to pick up in the weeks to come. Volatility in the market, because it remains an uncertain election.
Okay, thank you very much.
Thank you.
Charles-Henry Monchau was today with us. He's the Chief Investment Officer of CIS. Thank you, Charles.
Thank you so much.
I will now switch to Romanian for the closing remarks. Până data viitoare, fiind întins la investiții câștigătoare. Numai bine!
Știu ce spun.
Cresc tensiunile dintre Statele Unite și China au ieșit și s-au atacat reciproc.
Nu se poate. Unul fără celălalt ar fi dezastru.
Știu ce te interesează.
Ciolacu vrea să mai scadă din atribuțiile primarului de București. Nu a întrebat pe nimeni, nici măcar pe specialiștii lui.
Mi se pare aberant.
Știu cum să te fac curios.
A început invazia avatarurilor care vor fi profesori în școlile din Europa. E un mare succes.
Tu nu te duci la școală doar ca să afli lucruri noi. Școala te pregătește să fii un bun cetățean.
Știu cum să te emoționezi.
Singurătatea este una din bolile secolului.
Ai nevoie de tine, în primul rând, și apoi de oameni.
Să stai un pic să te așezi emoțional.
Știu să conving.
Republica Moldova este acuzată că a încălcat drepturile omului.
I-ați blocat la mantinelă pe niște candidați care nu vă plăceau. Așa face și Putin. Care mai e diferența între tine și Putin?
Cu alte cuvinte, Uniunea Europeană a spus
Maia
că...
Sandu putinistă.
Știu să câștig.
Rămânem prieteni, da?
Promit.
Știu, deci știi.